Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Monday, July 13th. What has President Trump said today? A couple of things. One, he says after the death of Senator Lindsey Graham on Saturday night, Sunday morning, he's asking flags to be at half staff for the week. He's also asking that he was a big supporter of the Clarity Act and sort of things that to keep China at bay, and that the Congress should pass the Clarity Act. I don't know how much of an impact that will have, but passing the Clarity Act would be good. Certainly would be good for crypto. The other big news, and he said this in the morning, is he said the Hormuz Strait is open, will remain open with or without Iran. We are reinstating the Iranian blockade. U.S. ship that looked very likely, as U.S. ships have Navy. The U.S. Navy has come closer to the Strait of Hormuz over the weekend. All other countries will have fair and open use of the Strait. The USA will be known as the guardian of the Hormuz Strait. And as a matter of fairness, this is interesting, will be reimbursed at the rate of 20% of all cargo shipped for any and all costs necessary to do the job of providing safety and security to this very volatile section of the world. No details out, in the past couple hours since he's done that. 20% seems to be a lot. I completely understand that he wants to be reimbursed for the cost of the, of the Navy and, the Navy and the Air Force and all the things, that it cost the U.S. to keep the Strait open, but 20% just seems a lot. So that may be walked back. We'll probably get some more details. So let's see. Okay. Bloomberg reporting that TSMC sales went up 36%, and AI spending momentum. They're the main chip maker for NVIDIA and Apple. They made $40 billion they had $40 billion in revenue in the June quarter, and 68% jump in the last month alone. They're Asia's most valuable company. So what Bloomberg Intelligence is saying, and we get their full earnings report on Thursday. Remember, they're listed on the New York Stock Exchange. So U.S. rules. Bloomberg thinks that the June sales reinforce our view that AI and server processor demand will comfortably offset smartphone and PC weakness. Expect higher gross margins above the consensus of 67%, closer to the upper end of guidance of 67.5%. The view is what are they going to say about capital spending, to be the focus of the July 16 earnings call? Whether we have the demand continues. That forward guidance is really important. But right now, these sales look strong. So TSMC, this is the TSMC New York Stock Exchange listed. The stock is down a bit here today. We may have a short-term high here, but I think if you get a substantial dip, it's a buy, because this demand for chips is not going to fall off the table. It will take some time, probably the end of next year, before looks like we see some moderation. And here's an interesting chart to see AI and AI infrastructure, the most valuable companies, and TSMC is the sixth most valuable company in the world. Okay, SK Hynix dropped sharply today as AI fears resurface. It dropped 15% in Seoul. Again, no real trigger, but I think a lot of leverage to the ETFs, both short and long. So the shorts might be getting into it. And remember that they're probably 25 to 30% of the index. So the Kospi was down, about 11%, and South Korean trading notably volatile. So the SK shares in New York are down about 7% today. The valuation, was cheap, has gotten cheaper. And I think if this is a name that you want, and at a PE of 5 or 6, I think it's a name that you want. I think you take advantage of the weakness now to buy it. Okay, so the Korean main index, Kospi, was down 9%, Samsung was down 11%, and SK was down 15%. So the rest of the names may have actually done better. This chart is pretty ugly, but I think this chart can turn around. Maybe not immediately, but the people who are buying it and happily buying it, I think at some stage are going to be looking to buy it again. Brent. So up 6.5% on continued attacks last night for the U.S. on Iran. Apparently, over the weekend, we've hit their eastern railroads, which actually have been shipping a lot of oil to China by land. So that should be important. As you can see, we had a dip at the end of the week. It's bouncing now. Depending on how Hormuz looks, if ships are going through successfully, we will see what happens. The rest of this week. Unsurprisingly, gasoline and heating oil futures are up with crude. Right now, about 6% on both, a little higher in gasoline since I made this slide. Fuel prices. Interestingly, the average gasoline price at the pump across the country has dropped a little bit from Friday, about just over a penny. I think the risk is still that it backs up, but Trump did complain that why are gasoline prices still high? I mean, there are a lot of different reasons. We are still in the summer driving season, so but we're in the middle of it now. They complained that they were sitting too high, so maybe this is why they haven't risen that much. I mean, the low in this cycle was 379 on the 7th of July, so about a week ago, and now we're just before the attack started up again, and we're only about a little less than 8 cents higher. Okay, the S&P 500 is lower on the day, but it's no rout. Certainly, not bad given what's happening in Iran and and the big sharp move in the Korean index. Remember the first time the Korean index really fell sharply, the U.S. Futures and stocks fell sharply ahead of it. But now it looks like the S&P is starting to shrug off Korea, and you can see on the day, unsurprisingly, energy leading the pack here, up 2.5%, but technology is down 2%, so that's dragging the overall index lower since technology a much bigger piece of the index than energy. So where are we? Here in the mid-afternoon. So essentially, let's look at this, right? The oil is up 6-7%. Oil, the different Brent and WTI, gasoline up higher, and fears of inflation are driving yields higher. So you can see yields all along the curve, up 4 to 5 basis points. So that's helping drive stocks lower. Certainly driving non-interest bearing assets like gold and silver lower, down 3 and 4%, and crypto is lower as well. And just to have graphic here, the green line here is the U.S. 2-year yield. The candlesticks are gold, and Bitcoin here in the blue line. And you can see certainly, now these are different. I want to show it clearly. So these are different axes, but as the U.S. two-year yield has gone steadily higher, has ground higher, though it's a little choppy. That's why you're seeing these non-interest-bearing assets down near the lows. So we have the Fed at the end of the month, and right now I think there's almost panic about a Fed move. At the moment, there's a 41% chance of a July hike. I just simply cannot see a 41, almost a coin flip of a July hike. He's looking at he's developed these 5 committees. He wants to see what they come out with new ideas on how to track the economy. Certainly the jobs situation, has calmed down a bit. It was pretty high in April and May, fairly soft in June. I mean, why would you hike now? There's plenty of time for you to wait and see how these things play out. By the way, the chance of a December, at least one hike by December, is 89%, almost 90%. I think July is overpriced. I think December is overpriced. So what do we have this week? The big data is tomorrow. Core inflation, 0.2%. 2, I think the market will be really happy with. 3, a little unhappy. 4, very unhappy, but we'll see. ADP has been drifting lower. I want to see if that stops or continues to drift lower. So tomorrow is really the big day on data. Then we have PPI on Wednesday. PPI tends not to surprise very strongly. So CPI going to be a little more important. And given what's happening in the Middle East, we are again going to keep an eye on where crude gasoline and heating oil, diesel stocks are when they come out weekly on Wednesday. And then Thursday we have jobless claims and retail sales as well as Philly Fed. Now, data is starting. The financials always kick it off, and the big five are really kicking it off tomorrow. J.P. Morgan, a $900 billion company, down to Citigroup, $240 million. You'll see that tomorrow. On Wednesday, ASML, they make all the machines that make the chips. So they're really important. And then you get a mix of Johnson & Johnson, BlackRock, which is an asset manager. I want to see what United Airlines looks like. It'll give us an idea of what the consumers are like. And then Thursday, we get the Taiwan Semiconductor, United Health that we've looked at a number of times, a bunch of different names. What's important about the banks is not just the EPS and the revenue. You will have to look at the internals, because they'll tell you, how clients and the rest of the economy are doing. Are they setting aside more money for non-performing loans? That's a really important piece of information that you will have to read and glean out. So we don't have it immediately tomorrow. We will have it on Wednesday. Well, thanks for joining me today. I'll see you again tomorrow.